Let's get into this week's market review where we analyze the market and gauge the probabilities of a crash or correction coming. Because you know at Fallible, we're always looking to the downside to help protect our money and manage our risk, which is such a foreign concept nowadays in these markets, where it seems like no one cares about risk management at all. But that's okay, we will help you watch your downside for you. So first up in this video, we got a Bitcoin update because some of you have been asking about that. Then of course, we're gonna jump into equities and where the markets are going. And we even have a stock that's about to fall hard. We're actually shorting this company in the macro ops portfolio, so if you're holding it, you should definitely consider at least letting it go. But we'll get into that thesis. And then we're gonna look at some speculation happening that may cause you to throw up. It's that bad. You'll see what I'm talking about. And then finally, I gotta show you a trade from our Fallible portfolio that is making us good money right now, and it also gives us a pretty good lesson. But okay, let's jump into it. First up is everyone's favorite cryptocurrency, Bitcoin. And you could see here, it's been getting a little volatile, not as smooth sailing as before, which is why I've been getting so many questions about it. And what's interesting here is that it seems to be forming a pretty good pattern. And patterns are nothing more than consolidations. That's what we're marking. That's why we draw all these beautiful triangles and other shapes all over our charts. Just helps you see, hey, price is compressing here. And what happens in markets when price compresses? It expands. You'll either break out higher or break out lower. That's how markets work. Compression to expansion. That's the whole name of the game. Now, in our opinion, we don't think this Bitcoin run is over at all. It's going to go much, much higher. But there are some interesting points about this asset. Famous hedge fund manager Bill Miller had something to say about it. And he talked about it here in his latest market letter. He said the Fed is pursuing a policy whose objective is to have investments in cash lose money in real terms for the foreseeable future. And we've talked about this a lot, right? Fed is keeping rates super low, so you don't get a good return on just cash. So companies such as Square, MassMutual, and MicroStrategy have moved cash into Bitcoin rather than have guaranteed losses on that cash held. And that cash is held on their balance sheet, obviously. PayPal and Square alone are estimated to be buying on behalf of their customers all of the 900 new Bitcoins mined each day. They're all going through PayPal and Square. That's crazy. Bitcoin at this stage is best thought of as digital gold, yet has many advantages over the yellow metal. If inflation picks up, or even if it doesn't, and more companies decide to diversify some small portion of their cash balances into Bitcoin instead of cash, then the current relative trickle into Bitcoin would become a torrent. Warren Buffett famously called Bitcoin rat poison. He may well be right. Bitcoin could be rat poison and the rat could be cash. And this is kind of the difference in this Bitcoin trend versus 2017, right? You have big companies and institutions putting their money into it. To me, it's strange that you would convert your cash into Bitcoin because Bitcoin is so much more volatile. Like you could see from the highs here to the low, it dropped 40% just in a few days. And that's one of the arguments about why Bitcoin is not a real currency, because it's not a real store of value because it's too volatile. The dollar would never fluctuate that much in that short of a time. No currency would. Cryptocurrencies though, yes, they do. But the fact that these institutions believe in it and they're investing in it, that means there's a lot more strong hands to actually keep the price higher. Something else that's interesting though, that a few of you actually mentioned in the comments on the channel, is that about 2% of accounts control 95% of Bitcoin. 2%. You can see it right here. Percentage of accounts owning 95% of Bitcoin supply. Very low. And only about 1% of the $600 billion invested in Bitcoin is institutional money. And 20% of the 18.5 million Bitcoin in existence are reportedly stuck in lost or inaccessible digital wallets. So this is very strange when you think about money. What if 2% of people owned all the dollars in the United States? That would be crazy. Same with 20% just being lost. And with all this talk I've been doing about institutional investors in Bitcoin and how this time is different than 2017, it's still only 1%. Now, as far as what that means for Bitcoin long-term as a sustainable currency, I don't know. But in the short term, you can see why the price shoots up so fast. There's a low supply of Bitcoins, and not just because they could only make so many, which you know is the big advantage compared to governments printing as much cash as they want, but also if a few people are holding most of it and they're not selling, then you could kind of think of it as low supply, high demand, and what's going to happen? Price is going to shoot up. So I would bet here that price breaks to the upside. And longer term, the trend is far from over. And one more thing, 2% of anonymous accounts holding that much, governments, even if they were going to move to something like Bitcoin, they don't like that. I kind of side with Dalio that a government would not want to give up the power of a reserve currency. And I'm not just saying our government, but any government. And also, if you can't print Bitcoins, that takes away your major policy tool that every empire ever has gone to fix all their problems. They print them away. That's what's happening right now in the US. But maybe this is a digital transformation and the old methods that have been done for hundreds of years, they're not going to work anymore. But I'm sure the government is going to fight against that. Controlling a currency is a a big power. But also in the comments, I've heard you guys argue against that, saying who cares what the government wants? The people want Bitcoin. Good argument. So we gotta see what happens. But okay, enough about Bitcoin. What about stocks? We love the stocks. And what we all always want to know is a correction or crash coming? Well, if we look at the SPX, the S&P 500, it finished slightly lower last week. And right now on the weekly chart, we could see an IOI breakout pattern forming. And this we've talked about before. It's an inside, outside, inside pattern. More than worrying about exactly how it works, just know that it's directionally agnostic, meaning it could break higher or lower. So to see which way it's going to break, let's look at some more data points. If we look at our macro ops indicator, it says that we are firmly in a bull quiet regime. And bull quiet means that prices just steadily rise, which is bullish. But one issue here in the trend that we're facing is extreme sentiment and positioning. They are at extremes now, meaning everyone is way too bullish. Everyone is positioned on one side of the boat. And when that happens, it's usually a bearish sign. That's how sentiment analysis works. Everyone being super bearish is actually good for the stock market. Everyone being super bullish, bad. So it's highly unlikely that we've even had an intermediate top in the market. The path of least resistance is still up. But we should expect an increase in chop and volatility because of the bullish positioning. Needs to be wrung out a bit. Prices need to go all over the place to make these people not so bullish. So the mid-January correction that we're expecting didn't happen. And that's why we do these videos every week. We've got to keep updating the story and checking what data is coming through and adjust our thesis based off that. That's why we talk about not being into predictions. It's all about probabilities and then managing your risk within those probabilities. Now it's crazy to think that the market barely takes a breather, right? It just keeps going higher, higher, and higher. But here's the thing to always remember. Even though we're looking at the downside, this market can keep shooting up and you don't want to miss out on that. So let me show you some data of what I mean. So here's a chart from Bespoke Invest showing the rise in US companies with over 500 million in market cap trading at over 10x price over sales. And it's collecting all the ones that have doubled or more over the past month. So this blue line shows where we are right now in this current market. But this light blue dot up here, this is the February 2000 reading at the height of the dot-com bubble. So you can see even with all the crazy bullish action we've had, we are far away from what a real bubble looks like. And here's the US's trailing PE ratio. You can see it's at 25.5 right now, way above the average of 14.9, but still below the peaks of the 99 bubble, the tech bubble. So our bet is that the market breaks the dot-com record by the time this cycle is over. So that's what the crazy thing about a bubble is. You know it's a bubble, but it can get much bigger than you thought. And that's actually always how it happens. So that's why you absolutely want to play that upside. A lot of money to be made. But you manage your risk so that you don't get blown out like everybody else afterwards. So we are overall bullish in this market. But some companies aren't doing so hot, including one that we are actually shorting in the macro ops portfolio. And by the way, all this research is for macro ops, our global macro research firm, which I forgot to mention in the beginning of this video. So the stock that we are shorting, you should definitely look at possibly selling if you're holding it, depending on your strategy and how long term you are. And that stock is none other than Salesforce.com. So right now it's coming off a near record high gap between its price and its 200-day moving average. And why is that important? Because it's the average, right? We know markets go from trending to mean reversion and they go back and forth between those two. It's another market law along with the compression and expansion that we were talking about earlier. So whenever something is far extended past its 200-day moving average, we do expect a higher probability of it pulling back. And you can see it right here. We're tracking the spread from 200-day moving average. This is the most extreme price extension since its 2005 top. It also put in its second highest price to sales ratio of 13x, while its revenue growth is declining to its slowest on record. Here you can see that again, price to sales ratio, highest valuation since its previous top, with, you see the revenue down here, slowest growth on record, not doing so hot. And what's interesting is that the shorts gave up on this stock a long time ago. Here's the short interest as a percentage of the float. You can see this red line is at the bottom. There is no one shorting right now. No bears, which is good because it makes it a under the radar contrarian play. So you get to get in before everyone else realizes. Analysts on the street have consensus buy and strong buy ratings on the company. Again, no bears here, and all the bullish news is baked in. So it's once again the sentiment type analysis. If everyone's super bullish, that's actually bearish for the company. For Salesforce in particular, who's left to buy? Everyone who wanted to buy, they're already in. Now the only thing left to do is sell. And last week, the stock closed below the upper level of its 3-year broadening top pattern, which you could see right here, suggesting that the stock has put in a major bull trap. See this? It broke above that broadening pattern, but it didn't survive, and now it broke back below, which is a very bearish signal, meaning the whole thrust higher failed. And that is what you call a bull trap. So you could see it potentially collapse from here, and you're going to see a lot of these people who bought thinking it was exploding higher, they're going to be in a lot of pain, which causes more selling, which accelerates it even further. And that's why at MO we are very short, because that's a good opportunity to make money off that accelerating price downwards. That's the power of playing a bull trap like that. And now we got to talk about the speculation happening in this market, because we mentioned it in the previous videos, but you're going to see with this example how bad it is. And this is a little video that's been passed around on Twitter coming from TikTok. So all those channels that we talked about on YouTube that are pumping penny stocks that are just terrible, don't know what they're doing? Well, imagine that in 60 seconds, and that's what TikTok is, even worse. And this is just going to show you the mentality in markets right now, and man, it's not good. Here, I'll play this video for you so you can see yourself.
So how do we make money from home? For starters, this is not a sponsored video. We just get this question all the time, and honestly, the answer is really simple.
So basically, I just trade stocks on an app called Robinhood, which I left a link in our bio if you want to check it out. It's free to download, free to sign up. They actually give you a free stock, so they're paying you to sign up. But again, not sponsored. And I know trading sounds intimidating. Here's my strategy in a nutshell. I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it, and I do that over and over, and it pays for our whole lifestyle. If you're wondering how much you can make doing this, in this month I turned about 400 into 14,000, and in this month I turned less than 1,000 into 20,000.
And honestly, my favorite part about this isn't even the amount of money you can make, but just the fact that we don't have to go to a 9-to-5 job.
Yeah, we can focus on things that we actually enjoy doing. So if you have friends that want to make money from home, you can tag them or send them a link. Or if you make money this way, share it in the comments so other people know there's more people doing this now.
Yeah, it's that easy, guys. But that's not all. Just look at some of the comments on this video. I do it part-time and do okay, but I need to take more risks. But 400 into 14K? I'm not doing enough. I turned 100 into 1K and I think I'm an expert. So the creator response right here. I use calls rather than shares to make the larger gains. Just be ready to jump out as soon as they start going down. Real easy. Another comment. I have Robinhood, but it's like reading Chinese to me. How do I understand what I'm looking at? Creator response. Up is good. Down is bad. I just ride the upward trends, and when they start going down, jump off. LOL. Oh my god. Penny stock recommendations needed. I have 150 in my account ready to invest Monday. Nice, Shani, Bobani, Chad, and Jenny. Cheapest one I do is Dogecoin when the markets are closed. Ride the spikes up, then sell when it starts going down. It is just so easy, guys. Here's the thing. Side hustles, right? Really popular on YouTube everywhere. Well, there's a few options for side hustles, right? You could work for DoorDash. You could go around to garage sales and find items that people think are worthless and then flip them on eBay for a bunch of money. Or you could skip all that work and just buy stocks on Robinhood that are going up. You could flip $2 into 10,000, no problem. And you guys remember what I was saying before, right? This stuff is actually working right now. So Chad and Jenny could jump on TikTok and tell people, because they are getting rewarded for taking these stupid investment actions. The famous venture capitalist Josh Wolf, he was commenting on this video. So he was saying these anecdotes are of people putting all their money in and seeing it go 2x or 5x. And that's a key point here. We're not talking about one position, right? When these people are investing because they don't know anything, they're putting their entire account. That's how they're making $100 to 1,000 in no time at all. That doesn't happen when you're actually position sizing correctly. So yeah, it's great on the upside, but horrible on the downside, as Josh says here. The problem is what happens when stocks go down as they did in 2000, not 10 or 20%, but 85% or more. And I showed you in a recent video, Amazon went down over 95%. So people will not be on 2 to 5x paper marks. They are concentrated and will be left with 1/10 of what they had in the account. And he goes on to talk about what I was talking about as well. And also for the individual investors, it is a toxic combo of addictive repetition that is currently working, plus rewarding doing more and bigger, plus the social proof of everyone else doing it. And the difference this time versus 2000 is that leverage isn't in margin accounts as much as it is in options. And you can see Chad and Jenny right here, they do about 50% shares and 50% calls, options. So again, you see someone on TikTok making this kind of money, of course you're going to try to go all in. And when it's working, you think, hey, this is possible. Why haven't I been doing this before? Why am I doing any real work? Chad and Jenny quit their job and now they just travel and trade stocks. What an incredible lifestyle. So another big difference between 2000 and now, and why we think this bubble will be so much bigger, is because of all the social proof you could see now. TikTok, YouTube, Twitter. You can see all these people making money constantly, all day in your feeds, versus before, what, in 2000 when the internet was still new, there wasn't social media. You just had to hear about it at cocktail parties. But now, pandemic, no cocktail parties, we're all glued to our screen. we get to just watch it all day. All these other people making money and not us. So you could see how this thing will run much bigger than before, but I could also see it burning out much quicker than before because people are getting so wild so quickly. This thing is spreading like crazy. I was just talking about side hustles, right? There is so much content about side hustles on TikTok and YouTube, of course, too. But what is the number one thing going to be? Get a Robinhood account and buy some stocks because they all go up. Why do anything else? And that position sizing that we were talking about here, these people putting all their money into one stock, that's why they're going to get screwed when that one stock takes a 90% dive and they lose everything, all the gains that they made plus more. So I'll show you an example in the Fallible strategy of a trade that we got smacked on, but we're fine because our position sizing is correct. And position sizing is a huge part of risk management. So this stock that I'm talking about where we got smacked on is Moderna. And oh man, did we get tossed around on this one. We got tossed like a salad in San Francisco. It slapped us around so much I almost checked into a battered investor's shelter. But let me tell you what happened. We originally got into this stock on 10-1, so back here, and it proceeded to go nowhere. So on 11-1, we ended up selling it for a very tiny loss. And by the way, this is our Fallible strategy, right? Which is a momentum strategy. It's all quant based. So what we're doing is using our TSI scanner to scan the momentum on NASDAQ stocks. And we get the top 5 here, and each month we rotate our positions to match this top 5. The idea being is we want to be in the highest momentum stocks because they have the best chance of going higher the fastest, right? And you can see mRNA right here is at the top of the list. And it was near the top of the list on October 1st when we got in, but it didn't go anywhere. And that's what happens with trades sometimes. It's not magic. Not every single thing goes up, contrary to popular belief on TikTok. So we got out, right? And then we got out and it took off without us because that vaccine news came out. So it sucked. Makes you think, what, the system is broken? What are we doing wrong? But no, we're not doing anything wrong. This is just real investing. And then the system had us get in again on December 1st, which you can see right here, terrible red candle. In fact, we got in and out the same day because it hit our risk point. And I told you guys about this trade before. Everyone was so frustrated, myself included. It sucked. And I'll tell you what, managing risk does suck sometimes. It really does, especially when you get thrown out in one day. That's when I was calling the shelter. But hey, we took our loss and then the thing started climbing after, so we started feeling even worse. But then what happened? It collapsed from there. So if we took our loss here and the stock dropped even further, what did we do? We just saved our money. And then finally, again, because mRNA is still at the top of this list, we were put back by the system. The system told us to get back in January, which at this point we've been tossed around so much. Who wants to get in this thing? But if you're following your strategy, you follow it day in, day out. You don't let your emotions and biases get in the way. And you can see right here how it's climbed since we got in. And now the gains we've made so far completely made up for these last 2 losses. And what I was trying to say before is that because of our position sizing, when we took this loss here or when we took this loss here, we're not all in on this stock. So if it fails, like many trades do in real investing, we're not out of the game. We're not getting blown out. So when you size properly, that's a huge factor in managing your risk. And when I talk about risk adjusted returns, a lot of times our portfolio is in cash. We have a few positions with a small amount of cash making outsized returns. So see how different this is from a TikTok investor going all in on one stock. And even when we have so much in cash, like look at our returns in 2020, 62% beating the market. Right now we're up 6% in 2021. The market itself is actually slightly down for the year. So we can take smaller positions so that we manage our risk but still get those returns. And that's what we talk about when we're talking about risk adjusted returns. How much are you risking to get what you earned? And in the case of a TikToker, it's everything. So when it does turn around, they're going to lose everything and then you're out of the game. And we talk about all of this in more detail in our free training where we go over this Fallible strategy that we use step by step so you can use it yourself. It is way better than any TikTok video, I promise. Not that that's a high level to clear, very low bar, but definitely check out this training if you're interested in investing like we do. It's the same strategy I use and a lot of our Fallible members do as well. There's a link in this video and down below in the description and comments. And it just makes investing a lot easier because we set it up so that we get alerts straight to our phones and we barely have to even look at markets. And we even go through psychology training so that we know to stick to the system, because you saw this example right here with mRNA. Most people, if they're not trained, they wouldn't take this trade the 3rd time and they would have missed out on the gains. So if you want to go over all of that, see how the strategy works and how you can use it yourself, click this link right here. It'll take you to that training where we talk about all of it. So click this link and I will see you there.